everybody. Welcome to Day Trader Next Door. We're going to do some questions and answers today. Wildfire smoke is mostly gone now. It's rained a good part of the night. It's all damp, but the air is much better than it was. I'm tired from a long drive yesterday, so I'm just going to work on my boat a little bit and take some time to do some questions and answers. Now, this is kind of a test for us. I have a dream of, spending a fair bit of time on the water in a larger boat. Problem is, around here we don't have any real big water, and I don't know how the family's going to go. They're all excited, but, you don't know how it's really going to turn out. So it's not fancy. If I got one 10 years newer, it would have been 50 or 60 grand. I paid $4 for this with a brand new engine. Now it's in pretty good shape. It needs a little bit of work. I've done a lot of it already, but hoping to get the rest of it finished by next weekend and get it in the water for Father's Day. So fingers crossed. Matai Zar, if you had to trade not at home, what would you use, a tablet or a laptop? Honestly, neither. But if I had to pick one, laptop. We are heading out on vacation as a family to Prince Edward Island at the start of July, so I am going to bring my laptop with me. I don't expect I'll trade it all that week, just because I just don't, unless I, have my screens and my comfortable setup. But I'll hopefully make some videos while I'm out there anyway. I code for bananas. Love to hear what you find most valuable to learn and focus on from Linda Raschke's plethora of material online. I like to listen to just about anything she has to say, to be quite honest with you. It's not going to teach you to trade per se, but she just has a lot of interesting observations. She notices things like that, and they just come out in her talks that she gives. And I just find them really interesting to listen to, and there's a whole lot of little things that are kind of in the corner of my mind that I've heard from her that I think of when I'm looking at the markets. Diane says, I like how price always moves in your direction when you leave the screen for a while and turn the music on. Yeah, that does seem to work well, doesn't it? I have a feeling if I tried it anymore, I probably wouldn't, though. Jack Livingston, I started trading at around 7 a.m. New York time. Find it much easier to trade than the New York Open today. This is from the end of May-ish, so, it's a slightly different market conditions maybe than it is this week. But yeah, that's kind of like my favorite time to place a trade is not necessarily 6 a.m. because I'm never at the desk by 6 a.m. I'm rarely at the desk before 9 or 9:30 now, but our morning routine has just changed over the last year or so here, and it doesn't let me get down until closer to 9:15, 9:30. But in an ideal world, I'd like to be down there at 8 o'clock and try and get in early on a small move early in the morning, and then hopefully let the open take it to my target. But price moves much slower, but it still does kind of behave in that time of day, and usually if there's a direction it will continue just slower. So whatever works for you, Jack. I think that's a great time of day. It's sort of like the normal New York morning session, just slowed down. John Smith, how did you come to use the 2.55, 7.5 as key increments? Does price action specifically react to those levels, or is it just a nice Goldilocks sized chunk? I started looking at that, I don't even really remember, but quite a long time ago. That's not something that I picked up from anybody. That's just something I did myself. And I think the big reason for that is just that I kind of figured out over the years that, like when we just as people, when we think about how much something costs, if something is $73 or $72.99, that's $75, Or if something was like $45 or $47, that's $50 for that. Or it's $17.99, well, $20, whatever. We tend to think of things in tens and quarters. And that's how I just kind of started breaking up my thinking in terms of price. I noticed that most of the time when price comes down to a 10 level, I don't mean like 10, it could be 10, 20, 30, 40, 50, and so on. There's usually a little bit of hesitation there before it goes further down. And it's not always going to turn at the next one, but if say a price is going down and it's going to continue down, it's generally going to bounce a little bit or have hesitation at each of those 10 levels, and it's just sort of like the difference between $40 and $50. Well, if you're thinking about how much you want to pay for something, well, I'd pay $40 for that, but maybe not 50. It's like that. And we think of it like with change even. It's a quarter or 50 cents or 75 cents. That's why I say those, the 75, 80 is kind of a zone. I've just noticed that, and I don't know which one's right, if it's 75 or 80, but I noticed that also, even more so, price tends to sort of hesitate more at the 20 to 25, 50, 75 to 80, and then back at the 100 levels even more. So I consider them kind of just a natural resistance or support, whatever it may be. Not that they're necessarily going to stop there, but you can anticipate some resistance getting through that, and if it does go through it, you can anticipate some resistance coming back up through it. You'll see price will just go. It'll come down like this, and then it'll wiggle a bit, and then keep going down, or it'll come down and it'll back up a little bit. And it just kind of made sense. And I noticed over the years that price really does behave that way. It really does in the S&P because of the size of the index. And $10 in the S&P is a big deal. Even $2.50 is enough of a difference relating to the percentage of it that it does mean something. Now in the Dow, not so much. The Dow is more like 25, 50, 75, 100, but not necessarily the little 250 in between or $5 in between, just because the size of the index is so much bigger. Crude oil, the same thing. Those round numbers and the even 10 levels, especially like the 50s and the 100s, or the 50 cents in the dollar, 25 cents even, that same behavior happens in those instruments. And I just found, okay, this kind of exists all throughout a lot of instruments where the price level lines up right for it to make sense. And I just started using that in my analysis. And I think of that when I'm in a trade. As we're going up or down, are we breaking these little micro supports or not? I look at each one as it goes, and if it does stop at it, well, how far back does it go? Does it pull back up one of those or two of those? And that's how I generally analyze how to exit a trade. Talmadge Moorhead, nice to hear from you, Talmadge. He's got a question from my last Q&A talking about kind of worst case scenarios. He said, had you been long instead of short during the COVID crash, how many points down do you think you might realistically have lost before you could get out? I was referring in the last Q&A, or maybe 2 ones ago, I think it's the last one, but about being short during the COVID crash and being short, and then a minute later or less, your limit down, and then it's paused for a while, and then your limit down again. I think I could have gotten out of that before it hit limit down again, most of the time. There were a couple times, though, where it was 5 seconds, if I remember correctly anyway. If I had to hazard a guess in those conditions, from what I can remember, say if you were one contract long and you were long into limit down and it was paused, how much would you lose beyond that at the next open before you could get out? Probably another 10 or 15 points, I guess. So, I mean, I shouldn't say nobody's going to go long into that, because I'm sure people did, but you're realistically not going to try and catch that knife, I don't think. But in something worst case scenario like that, you could have lost, from the time you entered your position, probably 50 points. So that's bad, but not totally catastrophic if you have a reasonable position size. But, ideally, you're just nothing's going to present a setup to you to go along in that environment, I don't think. Mirko Ewald, rookie question. Oh, not necessarily. If I use Interactive Brokers and TradingView, where do I subscribe to market data? TradingView seems to be a better option. I would probably it depends. If you're trading through TradingView, like if you're placing your trades through TradingView, which is probably what you're doing by what you're saying, you could be charting like me and then trading on Interactive Brokers' own platform or Sierra through them or something. If you're only charting on TradingView, I would probably just get the data from TradingView because the prices are somewhat reasonable. But of course, if you want to have your data on a third-party platform, then you have to either get it from Interactive Brokers or from that platform. Also, how much cash do I need in my Interactive Brokers account to trade the Micro E-mini? I would have to look that up. The typical discount broker margin for a Micro E-mini is $50 or so per contract. That doesn't really matter anyway. If you're trading one micro, you should have $1,000 to be super safe, okay? And provided you put in the right risk management and make sure that you really make it difficult for yourself to blow up, you don't have to be as worried about losing that $1,000 really quickly or anything. Could you do it with $500 if you have enough room in your margin? Yeah, you could try it with 500. But ideally, if you had $1,000 you could throw in there, then you wouldn't be under near as much pressure. You don't want to be under pressure. You got to take this as slow and steady as necessary so that you can build the consistency and not trade scared and sabotage yourself. Rusty Bandwagon. I was going through some of your old hardware repair videos. Did you learn that stuff on your own as a musician, or did you have some formal education in mechanical, electrical stuff? I don't have any formal education in mechanical, electrical, or music for that matter. They're just things I enjoy doing, and fixing stuff is fun and saves money. And music, well, it's just a natural part of life for me. Now I mostly hung up my playing and my gigging and my sessions and all that back getting close to 10 years ago now, and I do miss some of that for sure. So I'm going to try and at least do a little bit of recording in the basement on my own. Kyle Corbett, do you think I'd get better entries using the 2-minute rather than the 5-minute? Yes, I think you would. I think that the shorter the time frame chart within reason, the better you are going to be able to find concise entry. If it's too short, then everything looks random. But what you need to have two. You need to have a longer time frame chart to reference. Okay, and then you see on the 15-minute or even the 5-minute, okay, I think this is where I think it's going to hold, and I'm going to try and get in on a bounce off of this. Or I think it's going to come down, and I'm going to try and get in and go short on this pullback here. You zoom in. You're looking at a smaller time frame chart, it's like zooming in on it. So you kind of, you put that 2x lens on there, and you're looking closer to find the spot where price seems to roll the best, or to get in as tight as you can before the top. So that's the way I look at it. That's why I have all the different time frame charts up all the time, because I like to see it from a bunch of different perspectives. In my experience, I would probably find a better entrance on a 2-minute chart than a 5, and I'd probably find a better entrance on a 4,000 tick than a 2-minute. John Smith, this is the first time I've noticed you mention order flow. Does it factor into your trading? A little bit, but not a lot. Question of volume weighted average price, not something I concern myself with, really. I more look at the order flow as an indication whether the market is operating correctly and healthily, or if there's something wrong. If price is going down and you see orders coming on both sides in good numbers, but more on the downside, it makes sense. If price is sitting still and you see a ton of orders firing off in both directions, that makes sense. If price is spiking and it doesn't have the volume behind it and the order flow to support that, something's not behaving correctly. And that's kind of the main thing I look at overflow for. Also to see those massive orders. And a lot of times you get some continuations off of those, not so much in the last couple of months, but as a rule, somebody sells 1,000 contracts, you're probably going to see some follow through after that. Sleepy Bear, have you ever looked into algo trading, and what are your thoughts on it? Do you think it's possible? It's absolutely possible. There's people doing it every day. But those are the big banks and companies like that. Now, do I think it's possible for a retail Joe like me to do it? Maybe, but I'm not interested in it. My gut feeling is no. Not with retail accounts, retail data, retail commissions being the big thing, and hundreds of miles from the exchange. It's one thing if you have a team of software engineers working on it, co-located servers, no commissions because you're a member, access to the best of the best data of everything. That's a whole different playground than what we are, right? So I could be wrong. I'd be happy if somebody proved me wrong. That would be great. But, to me, I don't think it's realistic for somebody like me to consistently trade an algo that's like consistently profitable and where the drawdown is not so bad that you can't stomach it. Really, in my opinion, the only way this is doable and palatable as far as drawdown and that sort of thing is by discretionary trading. It's the only people I know that are successful at this really are discretionary traders. I have talked to some systems traders that are successful as far as they make money at the end of the year, but it often will take the entire year. They might be underwater for 6 months and then they have a fantastic couple of months at the end of the year. I couldn't handle that. That's too hard to stomach going through those times. That's why, the way I trade, I like to absolutely limit my time in the market. I like to get out as soon as I'm positive and take what I can get. Thomas Golick. Hello, I love your videos, but there's so much bass in your audio, I can't stand it after a few videos. It would be nice if you fixed that. I've had a couple other people mention that. I have since fixed that. So hopefully it's a little bit better. To my ears, I don't hear it. And I don't hear it in my headphones either. It all depends on your system. If you have a subwoofer that's cranked up, that's possible as part of it. But I have had more of a bassy sound in my voice. See, I'm kind of old school. I don't particularly like the new YouTube anechoic chamber starchy voice sound, but that is what is in style now, and that's what people set their systems up to listen to. I've come from the time whenever you EQ something so it sounds good flat, and you don't have to add bass or treble to it. But I have consciously taken that down, so hopefully that helps. Patrick Hearn, how do you think about your next day prep after a narrow day? Do you have the same approach or look at previous days open, high, low, close? You do something else? This is from mid-May, whenever the market was really compressed. So sorry for the delay on that, but pretty much what you say there, Patrick. I just do the same as any other day. It's been a flat day. Whenever it's like that, and whenever you have many flat days in a row sometimes, I kind of assume the next day is probably going to be a flat day, and I look at those previous levels, and those are the places I'm going to have for targets and stops and kind of zones for price to move back and forth. I don't approach it too much different than any other day other than, be prepared for it to be flat. Now, when the market's behaving correctly and properly and is moving freely, which it's starting to do a little bit better now, it's certainly not back to normal, but the last couple of weeks has been somewhat better. Now, if it's a particularly flat day and the market's behaving normally and moving freely, then I'm more inclined to think that we might see a push one way or the other the next day. I wouldn't say that yet now because it's still relatively tight, but in this kind of compressed environment, just expect much of the same. Be careful not to get in before price has shown some proof that it's going to break through to the next level, and just be content to take a little bit at a time and move to break even once you're into the trade, at least what you risked, so that you don't wind up getting stopped out for lack of continuation. Good question from Evan. What do you do to prevent just staring and forcing trades, especially when the market's particularly flat? I remember what it feels like to lose trade after trade after trade, trying to force them in those types of environments. Ryan, quite honestly, Evan, that's the answer. I do sometimes distract myself with YouTube in the other window, or working on something in Microsoft Word, or just, researching stuff, whatever. If it's really flat, I will take my focus off the chart a little bit, but they're still up there so I can see them no matter what I'm doing, right? But the biggest thing that stops you from doing that is remembering losing money over and over and having catastrophic loss days trying to make a trade when there was no trade. Serena has a question about prop firms, I believe. I've gotten asked this a few times before, and I always kind of reserve judgment on it because I don't have any experience with prop firms. So I can't say, though, this one's good, this one's not. I don't know. I've never traded for a prop firm. I've never been interested in it. And the reason is, I think that your best chance of success at this, and just the best way to do it, period, is to learn to trade your own money. First of all, trade in demo. If you never get profitable in demo, don't put a dollar in the market. There's no sense losing money you don't have to. If you can get profitable in demo, trade a tiny amount of your own money. You're trading your own money, your own method, on your own terms, your own time, and your own style, whatever works for you. And then you're never forced to trade. The thing with these prop firms, and I don't know much about, but I get emails from people. And I get emails from struggling traders. I get emails from successful traders, a number of successful traders. In fact, some are full-time, some are part-time, but you guys have been doing this successfully for years. So I don't just get the people that are struggling. And I've had some real great conversations. But one thing that I do notice is I've never heard yet from one successful prop firm trader. I'm sure they exist, but none of them have contacted me. If you're in the comments, say, yeah, I'm doing great, and this company works for me, etc. But I've never heard one good story. It's always people that are doing the evaluation, failing it, do it again, fail it, pass it, go to a live account, and then they fail, and they start over and stay on the wheel, But I think the issue with them that I can't get my head around is just the way it works, in that you have very tight risk. They put you in a very tight risk. That's okay. That's good. I recommend that. But then you're also forced to make a certain number of trades a day or a week. That doesn't work. You can't, that cancels the risk out. as far as success, the odds of success for that type of program, in my mind anyway. You can never be forced to trade. You only ever take a trade whenever there's one there sitting for you that looks good. The rest of the time, you keep your money out of the market, right? You can never be forced to trade. So and again, I don't have direct experience with it, so I kind of reserve judgment on that. And certainly prove me wrong if you want. But to me, I would say trade your own money on your own terms, in your own style. If you never get profitable in demo, don't trade live. There's no sense throwing money away. You know you're not going to make it live if you can't make it demo. But if you do get the hang of this, and you start very small and build it up very slowly, trading can take you all kinds of places. Kaspersen. Like your videos, trying to learn something new every time. Well, thank you for watching. I wonder, do you ever trade bigger moves than 10 points? Or did you in the past? Yes, I used to swing trade actually. And when the market's really moving, I like to try and get more than that. But the last few months, it just hasn't been. And really, if I get 10 points, I'm just as happy to walk, because I know that I got a pretty good chance of getting a winner the next day. And, I like to be out of the market. I only like to be in the market when I have to be, risk off the rest of the time. But usually, when the market's more open, you'll see my target's not going to be 10 points. It'll probably be more like a 20-point target. And I'm willing to take 10 because my risk was only maybe 5. So yeah, I do and have in the past traded smaller position for a longer target, essentially a larger trade profile. But, I've just gradually settled into what works best for me. And I find that the tighter trade profile with the larger position size just works better for me. And that's why I do it. My battery's at 3%. So one last question from Rick SEA. Like, I hear you use Sierra chart. I keep hearing the support is bad, and it's easy, but it's easy on the system. Using it, what's the operating expense to using it in AMP? AMP, Quantower, and Meta are completely free, including data feeds, according to him. I don't know. I'm not sure about that. Remember, mask for everyone and safe travels. Thank you, Rick. I'm not wearing a mask today, but the sky looks pretty well normal. We did wear them outside when we had to go outside, though, because it was literally like there was a campfire in the backyard. So I appreciate that. Yeah, the Sierra chart support is pretty much non-existent. Having said that, I've never needed it, and I've been using it for years and years. It generally just works. Sometimes it's a little bit tricky to figure out how to do things, but the help section, like there's a forum on their site. The help section is really good for that, for searching up. Other users chime in. People from Sierra will actually write in too and answer your question. But as far as like picking up the phone and talking to somebody, I don't know if that's even possible with them. The integration with AMP is pretty good. It's a little bit more complicated now, that a little bit more expensive too, that Sierra does not accept a CQG data feed, in its cheap package. Now you have to buy the package that has their data feed in it. Too bad. So around $50 US a month. I think it's $47.50 or something if you pay monthly. It's a little bit less if you pay in a chunk, but it works quite well. Quantower I don't have any experience with, unfortunately. I've been trading with AMP forever, but I've just never used it. I used NinjaTrader and then moved to Sierra when they dropped Ninja. Ninja started their own brokerage, of course, and then they kind of dropped their integration with other brokerages at the time, or maybe the other brokerages dropped it with them, more likely. But I've had zero need to contact Sierra chart support. I've always been able to find the answers to any issues on the forum, and it is not the easiest to use, but it's also extremely powerful. I don't use a tenth of what it can do. The thing I like about it is it just works. It's literally never crashed on me in the entire time I've been using it, and it takes up no computer resources, and it's lightning fast as far as getting your executions through, and it's something you don't have to think about. Having said that, a totally free data feed, provided it's level 2, would be very tempting if that would work. Sorry, I don't have any more experience with that. So, anyway, guys, my battery's going to die. Grab my cheat sheet and newsletter at daytradernextdoor.com. New newsletter will be coming out this weekend. Thank you so much for watching these. As always, I hope you find them helpful. I'll try and get them done more often. I really enjoy these. Have a fantastic weekend, guys, and I'll see you again soon.